So, basically, I'm fascinated at what people in the execs do, you know, in their businesses, and realize that whenever I talk, I usually talk about the tax law or something. I never talk about what I do. So, this time I'm going to talk about what I actually do when I sit in my office. Well, basically, I'd say 20% of what I do is tax planning, and 80% I'm a firefighter. I put out fires and do battles. So usually I'm fixing disasters. Speaking of which, I want to say hi to Steve St. Denny. I haven't seen him in a while. He's enjoying his $2,000 lunch since he eats here about once a year. And had I known he'd come, I'd make my presentation all about him because I can't think of a bigger tax disaster that I worked on, Steve St. Denny. So it's great to have him here.
It wasn't really disasters, Bob. It was triumphant.
Yeah. Oh, at the end, we won everything. Steve is the only person in the history that actually made money off the IRS on a complicated deal we did.
We're going to have to hear about that one.
Yeah. I'll get his approval before I go further. But I fix disasters, and those are usually people who don't file the correct forms on time, or have an audit and underreport their income, or overreport their deductions. I'm looking at you, Steve. But anyway, so how do I market? I have the easiest marketing job in the world. I have an 800-pound gorilla called the IRS. I don't have to do anything. They do all the marketing for me. They send out these nasty notices and things, and the business just comes rolling in. It's quite a sweet deal. Again, my practice is now pretty much I do a lot of foreign tax work, which means I focus on unreported foreign income, bank accounts, assets. So I want to warn you, this is probably going to be boring, so I'm going to need some participation. You all get to play tax lawyer. And so what I want you to do is just simply shout out, "Of course not." Let's hear you do it.
Of course not.
Yeah, that's pretty loud. That's good. I want to give you an example of what I do. Like, here's a trap. There's something called foreign bank accounts, or FBARs. This came into the law in 1970. And the threshold, if you have a foreign account, is $10,000. Well, right now, with inflation, or with cost of living and stuff, this is 1970, 53 years later, the amount is $78,000. So you need $78,000 in a foreign account to do this. So did IRS increase the threshold from 10,000 to 78,000?
Of course not.
You guys are on your way. I mean, so unfortunately, I do a lot of these FBARs. Of course, I don't have any international drug dealers or mafia types or any of that. All my clients seem to be like students who came to the U.S. and stayed here and had a foreign account, their parents set up when they were age 12 and they forgot about it, and things like that. But IRS thinks everyone's a criminal that has a foreign bank account, and so the law, the penalty is $10,000 per year if you're non-willful, and they can go back 6 years. So a lot of people are looking at $60,000 penalties for really nothing. I mean, they have a foreign bank account. Okay, so what is it that I do? Okay, I'm going to illustrate a problem. Okay, all right. Okay, the whole presentation is built around that. I had a client, I'm going to call him Tim, and he drew me this really cool map. It has, which I love, Bob in San Francisco, and so I decided to do a presentation about Tim. Tim is a U.S. citizen. He moved to China 12 years ago and started doing action figures. These are the first people to use 3D printers. I think he told me it cost $50,000 to $100,000 back then. Well, Tim's pretty good. Okay, he does stuff like this and this. Disney hires the guy, so he must be good. And so what he has, I'll just show all the action figures. So Tim has this company. It's based in Hong Kong, and he's got 2 subsidiaries in China where he actually produces the action figures. Well, he runs into trouble with PayPal. PayPal says, oh, you have a company in Hong Kong. We must take the dollars from in as Hong Kong dollars and transfer them to US dollars. We're charging you 10%.
Whoa.
Yeah, another 7% over their fee. So Tim gets the bright idea of, well, I'll just put the PayPal account in my name. So he puts the PayPal account in his name, and the reason I meet him is he gets a notice from the IRS that you owe $365,000 because you had $1 million of income because of PayPal. Oh God, what? Well, thank God Tim has all these records showing all the money went to his corporation, okay? And so we write IRS, I tell him, you know, IRS, they're gonna be on you for years on this. You know, we have to show you we're an agent, I draft an agency agreement, all this stuff. We send a response to the IRS, and they write back, what do they say? Do they say, of course, this is gonna take forever?
Of course not.
In this case, they said, oh, that's okay, you don't owe anything. Okay, I've been doing this for 40 years. I've never got a letter like that, ever. So, I don't know what happened, but in the process, Tim realizes, I have a foreign corporation. Whoa, there's all these reporting requirements for a foreign corporation I haven't done. Oh, I have foreign bank accounts. I haven't been reporting those. And then he finds out that during 2017 there was a special, Congress changed the law because it's called guilty, the best term ever, right? G-I-L-T-I, guilty. What it did was it said, okay, Google, Facebook, all you people shoving money into these overseas companies and never repatriating it to the U.S. And leaving it out there tax-free, we're going to make you send all your money back. Okay, that's guilty. And, you know, it's to get billions of dollars overseas. So, of course, Congress would make an exception for my little one-man person here, wouldn't they?
Of course not.
Oh, great. So that means I have to learn all about guilty in this incredible, complicated transaction. Thank goodness I hired Swift, Levy, and Polo, because that guy has to deal with guilty. Curtis, because we work together. It's very great. I say, hey, we have a problem with guilty, and then he has to spend weeks figuring out how to solve it. So it's kind of an equal relationship that I love. But they get me back. They send some of the most difficult cases my way. So I think we have a pattern. We've never worked on anything that was easy. So, how am I doing here? Okay. So the way this guilty tax works, it looks at earnings and profits. What do you have in your corporate earnings and profits? Well, Tim's got $1 million in earnings and profits. And so he's going to be taxed. It's about 10% or so, Curtis, on that? Somewhere around there. But he can't figure out where this $1 million is or what's going on. And so we go through, we say we need to see the accounting because we need to file certain forms. And one of the forms we have to file is called 5471. It is a monstrous form that, again, all the large corporations have to file. And here's my one-man person. So, of course, Congress exempts firms from doing this.
Of course not.
So, now we get to deal with that. Thank goodness Tim has accounting because he's paying taxes in Hong Kong and they do the books and records. But guess what? This form wants the accounting in what's called GAAP, G-A-A-P, General Accounting, the standard, I don't know, ever. I looked this up and it's, for big corporations, public corporations, those are regulatory. They want an accounting system that's this GAAP. Tim doesn't have GAAP. Well, of course, what do we do? Congress must exempt a little one-man corporation from GAAP, wouldn't they?
Of course not.
So, we got Curtis dealing with the GAAP issues and the earnings and profit issues. It does look like we might be able to cut his earnings and profits in half. So so that kind of lays out the situation. So he owes all these penalties for failure to file these forms, he owes taxes. Well, guess what? IRS has an amnesty program, and because he's overseas, he doesn't pay any penalties. He just goes into this amnesty program. However, he's got to file 3 years worth of accurate tax returns, and that means he has to file this form 5471, and it has to comply with GAAP. I looked through it, and IRS says no exceptions. You have to comply with GAAP. So, we're going to be able to get him off all these people, get him clean, all of this. He's going to have to pay, I don't think a boatload, but pretty close in accounting fees to get straight. He's got a great business going. So, he says, what can I do to stop this? And I said, I have a solution. What you do, oh, here we go. Hey, they put it back on. What you do is you form a U.S. corporation, a subchapter S corporation, of which Tim's the owner. The Hong Kong corporation is owned by the S Corp, and we do this magical thing called a disregarded entity. We can disregard this entity, which means all the income and expenses are reported in the S corporation, which means we don't have complicated 5471 issues. We don't have guilty issues anymore. The tax is going to just flow right down to him. In addition, the way this is set up, I don't know, we've talked about qualified business income, QBI, where you can take a 20% deduction on your profits, small businesses. We can now incorporate that deduction into his planning because he now has an S corporation, and the bulk of his earnings are U.S. source earnings.
Was he a sole proprietor before?
No, he was a S corp. This is a C corp. He owned a foreign C corp.
Okay.
And so we're forming an S corp. We're going to have the S corp own the foreign C corporation, separate tax-paying entity, and we're going to disregard it for tax purposes. Which means for the whole outside world that he deals with overseas, his company is still there. I mean, he hasn't changed a thing. All the contracts are the same. The subsidiaries and all the reporting's the same. It just all flows to that tax return, which means we get rid of all these foreign, onerous foreign requirements. He gets this 20% deduction for QBI on the profits that are a U.S. source. And there's another thing. He's been doing this, but another thing. Because he's working overseas and paying himself a salary, he's paying himself up to $120,000 a year tax-free. So he's going to pay himself the salary tax-free, get $120,000 there. His company gets a deduction for that, the S Corp. And then the leftover profits, most of which he'll have to pay tax on, but he gets a 20% deduction. So we take this mess, and here's the result. So what happens with the S Corp, it can have a PayPal account directly and eliminate all the hassles we've had with PayPal. He still gets his $120,000 tax-free, which his S Corp can deduct. He still gets his 20% QBI deduction on any profits. What other great thing did I do? And any of the profits that need to be in Hong Kong, he pays tax on. He gets a foreign tax credit for those. It's not quite equal to what he'd pay in the U.S., but he gets that. So, ta-da!
Hey.
So that's what I do. I work very closely with Schwiffley and Polo on a lot of things. So it's taken me 40 years to realize this, but I finally figured out my role. I'm just one big, expensive sleeping pill. That's what I tell them. If you can sleep at night, don't use me. But if you're terrified you're going to go to prison, your finances are going to get wiped out, just offload the problem to me. I'll handle it. You go to bed. You go to sleep. And clients can kind of relate to that, I think. So, with that, I'm done. Does anyone have any questions? I saw you shaking your head.
Real quick question for you. So this is the solution moving forward. What happened with the tax consequences of not doing it this way?
What's going to happen, Curtis?
That's my problem.
Well, basically the problem is he needs to file 3 years worth of tax returns, and and his income, he'll have guilty income on there. It's not going to be $1 million. Probably more like 100,000 or so if it's the current stuff. So he'll owe some tax on that. And the thing is, so you've got this, say, $100,000 worth of earnings and profits. The tax is 10%, let's say. Okay, he pays the 10%, but he can now pull down the whole, the balance, the 90, and so that goes into his pocket. So he's not going to have to pay any penalties for F-bars, which are $10,000 per year. The 5471 penalty is $10,000 per year. I think we calculated about 160,000 in penalties. That because of his situation and by making certain filings with the IRS, we can eliminate those. But he has to pay the taxes and the interest. He does not pay penalties on the taxes that are owed for the past 3 years.
Hold up.
No.
Somebody's first?
No.
Thank you. Would you explain to me the difference between an S Corp and a C Corp, and why would you use one or the other?
Well, to answer your second question first, that's probably a 3-hour conversation. I mean, you look at all kinds of things.
Wait a minute,
But let
wait
me
a
say,
second. And will that 3-hour conversation be at $1,000 an hour?
no, I don't give discounts.
That was, wow. Look how proud he is that he came back with that. Look how proud he is. Very good. It was very good.
Hello?
You think I'm kidding?
No.
I'm not kidding.
I'm gonna give you a hypothetical.
Hugh Tuck can attest to the fact I'm not kidding.
Okay, Bob, I have a hypothetical for you.
Okay, let me finish. So the difference, a C Corp is a separate tax-paying entity. It pays its own taxes, okay? But if it makes a distribution as a dividend, there's a second level of tax. So when a shareholder receives a dividend from a C corporation, it's taxed again. It's taxed at a favorable rate. It's taxed at 20% rather than ordinary income. But there's a double tax with a C corp. There's a lot of other things that go on, but that's what a C corp is. An S corp, the shareholder is taxed on the money directly. Whatever the income is, at the end of the day, it flows right down to the shareholder, and they pay the tax on their tax form.
What is normally done for a small corporation?
Microphone.
The people online can't hear you.
Oh, I'm sorry.
And what is normally done for a small corporation? Corporations like people in this room would have.
Mostly S corps.
S Corps.
Yeah. Just like this one. For the same kind of reason.
Thank you. And is there any charge for this answer?
This one I will give you a discount of only $1,000. Okay?
Thank you.
You earned a discount on that.
Okay, so I have a hypothetical for you. Like your client, Timmy, let's say I start a business, since we live in a gig economy.
Okay.
I find a tchotchke and it goes gangbuster. Everybody in the world start buying it. What kind of corporation do I set up in U.S. so that you minimize taxes?
Well, you probably want to set, first of all, you probably want to set up an S corp, or possibly a limited liability company, an LLC. It depends. They're both flow-through entities, which means the taxes come straight down to the income comes straight down to you. And that protects you against liability if somebody injures themselves on your tchotchke thing and sues you, or you don't pay the corporation doesn't pay its bills. Pardon?
Global sales. Well, how do
Oh.
I pay tax on that?
Well, again, you've got Tim's problem.
Yeah.
You either form a I think this works. I would just flow the money to the S corp. You know, if Tim had his C corp still in Hong Kong, he's got to pay tax on all the residual money, the earnings and profits through this GILTI tax. You can no longer accumulate money tax-free overseas. You have to pay a tax on that money currently. So, I mean, that's what I came up with, so I'm not sure there's a better solution. Mr. Farino.
Yeah, Bob, I have to tell the group, I just met with my attorney today on a business matter, my attorney. And I have to say the gist I got out of all of this is that don't try to do any of this stuff by yourself. This guy's probably been through every single situation. And some people say, well, why did you go to your attorney? I said, I know it's going to be a bigger problem if I don't. So Bob knows all international law, or 99%. He relies on as a waiter to a busboy.
Yeah. Well, we're co-equal
No,
partners.
I'm saying an assistant.
Yeah.
It's always the wise thing to do, in my opinion.
We had a member in the execs, and he said the smartest thing he did was have a very good lawyer. Bill Maxwell, remember him? Bill Maxwell, world's greatest insurance guy, that's how he introduced himself. And he had an attorney, Dick Kaplan, who was part of the execs. And he said, you want to be successful in business? Hire someone like him to keep you out of trouble. And what Chris says is right, and unfortunately I make a lot of my money off of people who don't take your advice, who decide to go do their tax returns themselves. And it's understandable, they come to this country, they just have wages, and they go to TurboTax, but they forgot that their parents, I have the situation, parents have made them over $2.7 million in gifts that they have not reported. The penalty is 25%. So I get stuck with stuff like that. And I go, gee, maybe if you went to a CPA or and explained your situation, well, no, I just do it on TurboTax. Well, yeah. I run into that a lot when foreign parents make gifts for down payments on houses because there's so much they don't report it, the money, and it's a 25% penalty. But I think I can get her out of it. I kind of forgot how, but I'll come up with the how later.
They forgive the loan.
Oh, basic, huh?
Isn't it they make it a loan?
Well, yeah, I
They
don't.
forgive
Yeah, in retrospect, you know, I'd want some emails saying it was a loan. I don't want to all of a sudden, I don't know, magic. Actually, I think in that one she did. I think this is the one. She had a bank account that she didn't report that earned some interest. So she has unreported foreign income, and because she has that, she can go under one of the amnesty programs. Now she cannot escape paying penalties. Well, there's a 5% penalty on the amount in her account, but we can get rid of what's called a 3520, which is the foreign gift form. I think we can fix that. I think she's now in Hong Kong looking for bank accounts to show that she had some interest income, because that's what I told her to do. You go find some interest income so we can use this exception. So, yeah, so a lot of people get in a lot of trouble because they do their own tax returns because they think it's simple, and it turns out there's issues in it. Oh, well, I don't, if there are, Steve. Mr. $2,000 lunch, yay!
I heard you mention something about foreign income not being taxed.
Oh, that's if you work overseas. If you have if you're out of the country, you're a bona fide foreign resident, which is like 330 days out of a year, out of any 12 months, or you're resident there.
You left that part out, Bob.
Okay, sorry about that. Well, I tried to say sorry. But you can move overseas if it's going to help.
I'm good here.
Okay, are you sure? Thanks for correcting that, I appreciate it.
No, I didn't correct it, you did. I just want to take advantage of it.
What's the tax rate like in China? Like, does China have an income tax also? So they
I don't think it's much. Well, Hong Kong, I think his corporation pays 16%. Hong Kong, I mean, China, I'm not sure. But I would assume their tax rate, if they have one, is probably under 20. I could look it up.
I have a question. So how did you get him to not pay any penalty and tax on the back taxes that you owe in
Well,
3 years?
the IRS has what's called a streamlined disclosure program, and it basically says we're going to waive all the penalties, but you got to pay 5% of the highest value of your assets overseas. So let's just assume this company is worth $1 million. You'd have to pay a $50,000 penalty in lieu of everything else. But that does not, the penalty does not apply if you're a resident of a foreign country, which means you haven't been in the U.S. for more than 35 days during the year, and he hadn't been back to the U.S. since COVID, so he'd been out for 2 or 3 years. So he falls under this special exception that says there's no penalties. But you got to swear under penalties of perjury. You're not willful. You got to file accurate tax returns, which requires Curtis to go through them, that kind of stuff. But that's what we did.
Bob, put this one off.
Yeah, it's on now. Bob, of your 40-year experience, 2 questions. First question, what is an average case? Are your clients charged for coming to you? And what is your success rate?
Well, 100%. I mean, you never lose.
So
That depends what you mean by success.
success means they don't go to jail. Success
I
means
haven't anyone
they
go
don't
to jail.
they don't get fined.
Oh.
Success means they can go right on with their business.
Well, I can't calculate that, but I don't think I've had anybody ever have to pay the full amount. I mean, I think a lot of them, if they're wrong, they pay probably 50%. If they're right, they pay nothing, if we can figure out how to do it. Yeah, no one's ever gone to prison, I think.
And might that cost them $250,000 or $500,000?
It cost you that much.
Okay.
Honestly, I'd say some stuff's most stuff's usually around 10,000 or less. Other more complicated cases, maybe, twice
Okay.
as much.
And
I have some stuff that's like audits and things that, I can get several $100,000.
okay. And the last question I have is what triggers, from all your 40-year experience, what triggers the audit? What is really the red flag that the government's looking for? Is there something, oh my God, if you showed that, like when you did Trump's tax return, you showed red flag after red flag after red flag.
Okay, well, honestly, the red flags are if you have an S corporation and there's no salaries being paid to the owners, because that's a huge red flag because you need to pay a reasonable salary. And then it's they take huge entertainment expenses, huge travel expenses for businesses, showing losses, huge losses year after year with no correlation, things like that. I mean, honestly, I had a client, a woman who was getting audited because she took a $30,000 deduction on clothes that she donated. And she included bras and panties. And the auditor got furious.